Have you ever wondered why central banks are suddenly writing urgent papers about Bitcoin and what they're so afraid of? Today on the TFTC podcast, I'm sitting down with James Check, a leading on-chain analyst who has been studying the relationship between Bitcoin and central banks for years. James has an uncanny ability to read between the lines of central bank communications, and what he's discovered in their recent papers about Bitcoin reveals a story that most investors are completely missing. In this video, we're going to explore exactly why central banks are publishing these papers now, what they're really trying to accomplish, and most importantly, what this tells us about Bitcoin's growing influence on the global financial system. Through my work at 1031, I've watched institutional investors wrestle with central bank messaging about Bitcoin, and what James reveals in this conversation completely changes how we should interpret these official communications. I've been analyzing central bank policy since 2013, and I've never seen them this focused on Bitcoin. This conversation with James uncovers insights about their true motives that even surprise me. The timing of these papers, their specific language, and their intended audience all tell a fascinating story about Bitcoin's increasing threat to central bank authority. If you're enjoying this type of content, hit the like button and subscribe to the channel. This is just a small portion of my full conversation with James on the TFTC podcast. You can find the link to the full episode in the description below. Let's dive into what central banks are really saying about Bitcoin, and more importantly, what they're trying to hide. Let me break this down into 4 key points that reveal what central banks are really trying to accomplish with these papers about Bitcoin. The first point might surprise you. It turns out the European Central Bank actually just confirmed Bitcoin's biggest value proposition, and Marty explains exactly what they admitted.
We have somewhat circumstantial evidence that the central banks even believe this with the papers that were recently written by the European Central Bank and the Minneapolis Fed branch, which basically, the ECB tried to basically say that Bitcoin has failed as a payment system. It's a zero-sum game. The hodlers are going to get extremely wealthy. And if you don't get in if you don't have Bitcoin, it's going to be at the detriment to you.
What we just heard about the ECB paper is extraordinary. They essentially admitted that Bitcoin holders will get wealthy at the expense of those who don't own it. Think about that for a second. One of the world's most powerful central banks just acknowledged Bitcoin's wealth transfer effect. This isn't coming from a Bitcoin maximalist on Twitter. This is the European Central Bank. At 1031, we've seen how institutional investors react when they read these papers, and this particular admission keeps coming up in our conversations. The ECB tried to frame this as a warning, but they've actually given us one of the strongest endorsements of Bitcoin's potential we've ever seen from a central bank. The fact that they're specifically calling out hodlers getting wealthy while others get left behind reads more like an investment thesis than a warning.
It's funny, isn't it? Like it is almost the best thing they could do, because they're basically saying, like, don't look at this. It's the perfect Streisand effect. Don't look at this thing, right? If Bitcoin was irrelevant, there wouldn't be any papers written on it. But the fact that it is relevant and it is growing and it is seeing this uptick, right? It's no surprise that they're writing this as the market's starting to push higher again. If the market was trading lower, they wouldn't be writing this stuff. I did find it very interesting when you see like the ECB, and again, I don't know how they end up, who has to review these things and what the process is for writing a piece like that.
James's observation about the Streisand effect here is crucial to understanding the psychology behind these central bank papers. The timing of these publications is no coincidence. They come as Bitcoin's price and adoption are showing significant strength. I've been following central bank communications about Bitcoin since 2013, and there's a clear pattern. The stronger Bitcoin gets, the more urgent their warnings become. It's like watching someone deny something is important while simultaneously writing lengthy papers explaining why it's not important. The contradiction is obvious, and as James points out, if Bitcoin were truly irrelevant, these institutions wouldn't be spending resources studying and writing about it.
What they're missing, they obviously understand it. What they're not talking about is the fact that, well, really, it's just you destroying the denominator, right? What you're doing is saying that everybody has to hold this paper while we print it. And it's, again, they need people to hold the paper. This is the other thing, right? The system needs bag holders. This is why they regulate funds into having to own X amount of treasuries. They need someone to hold the paper as they do the debasement, right? And the more people that opt out into gold, silver, Bitcoin, whatever it is, assets, stocks, the more people who opt out, the fewer bag holders exist for the paper.
This might be one of the most important insights about how the modern financial system actually works. When James talks about bag holders and the necessity of people holding government paper, he's exposing a fundamental truth about our monetary system that most people never consider. Think about pension funds, banks, and insurance companies. They're literally required by law to hold government bonds. Through our work at 1031, we see how this regulatory capture forces institutions to hold assets that are being deliberately devalued. Bitcoin threatens this system because it offers an exit, a way for capital to opt out of this managed debasement. The central banks aren't just worried about Bitcoin's price going up, they're worried about losing their captive market for government debt.
Because like if I think about like at a retail level, right? If I think about people that in my world that aren't into Bitcoin, they wouldn't know what the letters ECB stands for. They wouldn't understand what that even is. So the vast majority of I don't think this is targeted at retail. This is targeted at the institutional guys who are starting to think about this. It's more or less, if you think about what's the number one thing when you hear institutions, wind back the clock 2 years, what's the biggest thing that most institutional guys and TradFi guys would say? There's the volatility, which is fine, but the other one is they're going to make it illegal. That was always the big risk vector.
Here's where James connects all the dots. These central bank papers are performing a very specific function. They're not trying to warn retail investors about Bitcoin's risks. Instead, they're sending a clear message to institutional investors who are considering Bitcoin allocation. By raising the specter of Bitcoin being made illegal, they're attempting to create enough regulatory uncertainty to keep institutional money on the sidelines. But here's the irony. Just as James points out, if the central banks believed they could actually stop Bitcoin, they would take action rather than just writing papers about it. Their choice to try to discourage adoption through threats rather than action suggests they recognize they may not have the power to stop Bitcoin's growth. Even if they wanted to, let me know in the comments. What do you think about these central bank papers? Are they actually worried about Bitcoin? Or are they just trying to protect their control over money? I read every comment and I'm genuinely curious about your perspective on this. Now that you understand what central banks are really saying about Bitcoin in these papers, there's something even more important you need to know. In our previous video, I break down why Bitcoin is positioned to replace gold faster than anyone expects. These central bank warnings and Bitcoin's relationship with gold are deeply connected. They're both signs of a fundamental shift in how the world views money. Click the video on your screen now to understand exactly how Bitcoin could challenge gold's monetary dominance. And if you're serious about staying ahead of these massive shifts in the financial landscape, subscribe to the channel where we break down these crucial developments every single day. Stack sats and stay humble.